The monetary policy rate has been retained at 27.5%. The asymmetric corridor around the MPR also unchanged, plus 500 minus 100 basis points. Cash reserve ratio, the DMB stands for Deposit Money Banks, 50%, that's unchanged. The MB is for merchant banks, 16%. The liquidity ratio at 30%. And then he talked a lot about the foreign reserves, 9 months of cover, stability of the Naira, ATM fees, inflation, and the like. So joining us to unpack all this, we have Mr. Ronald Nwaezeapu, who is the Divisional Head, Global Markets, Treasury, Financial Institutions at Coronation Merchant Bank. Good afternoon to you, sir. Thank you so much for joining us. And we are glad that you're with us here. So was this decision in line with your forecasts? What do you make of the decision to maintain, keep all parameters unchanged, basically?
Okay, thank you so much for this question and for having me. All right, so yes, it was in line with our forecast. Many experts and analysts in the market. This is born out of the CBN or the governor's comments himself. Yeah. When he says that their decision is going to be data-driven and evidence-based. So you could tell that he would not move based on just one metrics. You want to see a trend. And you recall in his speech, he mentioned the fact that there are still some inflationary pressures in the horizon. He spoke to increased tariffs with respect to electricity. So we didn't expect him to act just on one metric. So this is in line with our expectation. Again, the next meeting is 19th of May. He indicated that there might be a cut at that meeting. But again, he used the word gradual many times in the course of his speech. So I think he's cautioning the market that it won't be as fast as the market has recently shown us. The market has been really aggressive in trying to catch the curve at the very top. And I guess we'll speak more on that in the course of our discussion.
Indeed, indeed. Now, speaking of our, yes, I do want to ask you about one of the metrics, which is, or one of the parameters rather, which is the cash reserve ratio. Now, this, of course, led to quite a lot of debates. We had the chair of the Bank Directors Association of Nigeria, Mr. Mustapha Chike-Obi, along with Mr. Tiliwa Adibajo, the CEO of the CFG Advisory. They co-authored a report on interest rate spreads in Nigeria. And I do want you to listen to one particular excerpt from that conversation where the chair of BIDAN was talking about the cash reserve ratio. I want to get your reaction to that.
The biggest impact on that interest rate spread is regulatory, and it is the CRR. Nigeria has the highest CRR, cash reserve ratio, in the world at 50%. The next to Nigeria is Turkey, and Turkey had serious financial issues at 25. You have places like Malaysia and Indonesia at 2%, China at 9%, we're at 50. What this simply means is that for every Naira deposit a bank gets, they must give half of it to CBN, 50%, at 0% interest rate. So what we do is that if we're going to take a deposit that we should pay 20% for, we pay 10% because we're giving 10, we're giving half of it to CBN. That's the biggest impact on the spread, on the interest rate spread, by far. You and I understand that if CBN says CRR is 100%, that's the end of banking. Right. We will not take deposits and will not make loans. And at zero, we will lend more and interest rate. In fact, in many countries, the lending rate is lower than the monetary policy rate because they have money to lend to selected industries. So I actually believe it's lower in many cases in the US, where the lending rate is to IBM will be lower than the monetary policy rate. So that's the biggest impact. Now the others, charges.
All right, so I wanted to get your reaction there. Where you fall in on this cash reserve ratio debate, with the banks feeling that, okay, look, these are funds that are sterilized, we can't use them, they're not earning interest, and so on and so forth. Where do you fall in there? On this pressing matter.
On this pressing matter. Clearly, you know my answer.
Yeah.
As a banker, I fall in on the narrative that it's too high.
Yeah.
But what I would like to do is appreciate this central bank. What it has done is standardized the CRR treatment.
Yeah.
Like in the past, where we had, it wasn't standardized. So we had some banks. A bank was complaining that their CRR ratio was actually 100%. Others 70, others probably a little bit below 50. But this CBN has standardized.
So across the board?
Across board.
Yeah.
All banks 50. And then per week, it is measured against your deposits, Naira deposits. And again, this central bank has made a distinction between commercial and merchant banks. The previous one, all banks were treated the same, even though merchant banks are subject to much higher cost of deposits.
Right.
Since they do not have access to retail deposit base. So that's why you see the distinction 50 and then 16%. For merchant banks, 16%. So as long as we continue to see massive government spending, okay, so over $1 trillion is injected into the economy every month with FAC and remitter payments. The CBN is under pressure to mop this liquidity up in order to keep the pressure on inflation and then exchange rates moderated. But if we begin to see better, more productive use of government spending, maybe we might have a listening ear of the CBN in terms of reducing CRR.
Okay, all right. Now, thanks to rebasing of CPI, we now have a positive real rate of return. So I want to ask you about rates, and I guess we'll get to Treasury, the yesterday's Treasury bill auction. But what do you make of where things are now with rates after this rebasing? Because now you've got your monetary policy rate at 27.5 is higher than your, CPI now for January at 24.48. So, your triple R is now 3.02%. Where do you stand? How do you see that development there?
Okay. For me, I would see this as an opportunity for the government and the CBN to boast about having a positive return on inflation, at least for a while. Because even with the start of the hike early in 2024, we never got to a positive return. Real rates, even at the height of OMO rates and NCB rates, at nearly 30%, it was lower than inflation reported. So this might be an opportunity to have positive return for a while, given the governor's comments that it will be gradual. So I don't think they will be rushing to go into a negative territory. But given what has happened in the market recently, where NCB rates closed as at yesterday, we are back in the negative territory for NCB rates.
Right.
But I believe with this guidance from the CBN, it might inch up again, given that the CBN has guided that rate decrease will not be as aggressive as we saw in recent weeks from the secondary and then the NCB auctions that took place end of January and then recently yesterday.
In fact, let's even pull up those rates now, as you mentioned, because we did see, I think it was undersubscribed for the 91 and the 182, but vastly oversubscribed for the 364-day for those Treasury bill rates. So what would be your outlook for rates going forward? So where this prior stop rate? So yeah, 18, 18.5, and 20.3, and yes, you correctly nailed it. So 17, 18, and then 18.43. True yield, still in double digits. But yeah, what's your outlook for rates? I mean, with where things are now.
Okay. Before I go into that, let me quickly speak on the last question.
Yeah.
We know that the MPR anchors lots of rates.
Yeah.
Loan rates, deposit rates, and then securities. So with the rates remaining fixed at 27.5%, well, I don't see banks in a hurry to drop interest rates on their loans,
right?
Which is about 3% premium to MPR. For savings deposit, it's 30% of MPR, so it's about 8.25%,
right?
Which is the highest in about 10 years. I think the CBN will not want to aggressively drop that for the sake of savers and all that. So those are the major dynamics, the asset side and then the deposit side. To your question, I think with the NBS, the Nigerian Bureau of Statistics, publishing the reweighting table earlier, many people were able to estimate the level of inflation.
Inflation, yeah.
So even my internal team, we got it about right. So that is a 10% decline. So this spooked the market. And then based on the fact that the CBN had communicated that the framework for MPR determination will largely surround inflation. With a 10% decline, the market expected that MPR rates would be cut. But clearly the governor has communicated that is not that aggressive. But with the uncertainty, the market's about 300% bid to offer margin.
Yeah.
So in other words, an offer of say 500 billion, you have bids of 2 trillion.
Yeah.
So the whole market was in a hurry to catch the curve at the top, expecting a decline. So that is what had crashed rates to these levels. So like you showed in your table, we have NTB crashing by more than 400 basis points.
Yeah.
We have OMO also declining, but not as aggressive. So that speaks to the CBN's, because OMO is the CBN's own instrument.
Right.
So that declined by about 200 basis points. And then for bonds, bond has been a bit more resilient and resistant. So the first bond auction for the year, we actually saw rates increase. Then the second one will be on by Monday.
So will that follow T-bills and others in that same trajectory?
Yes, we expect a decline, but not the pace
as pronounced as what we saw
as
with
NTBs.
Right.
So it will be a bit more moderated because it has the advantage of being post-MPC and getting the guidance from the CBN that we do not want it aggressively declining.
Right. Yeah. That makes sense. That makes sense. See, this is why we have the experts on the show to break this down for us. Now, we can't talk about the inflation. You already talked about rebasing now. Without talking about money supply, right? So data from the central bank, 17% growth in money supply to about 110.9 trillion or so, 17.3%. But, so there's a lot of talk and chatter about money supply. But there's another narrative with respect to the fact that because the currency has been devalued, people are of course going to demand more money to some extent to pay for goods that were not as expensive, a year or two ago as they are today. So should we be, still harping on about money supply in nominal terms, or focusing more on it in terms of the value vis-a-vis what the currency could buy prior to where we are today? How are you viewing the money supply discussion?
I think it's still very important.
Yeah.
Because of the productivity of the money's use.
Yeah.
So if we have high money supply, but it's not productively used, we have leakages and corruption. All those dynamics remain quite elevated. It's going to be troublesome. So I believe the central bank is mindful of that. Budget is 54.99 trillion.
Right.
I mentioned even before this heightened budget, monthly injection into the economy was over 1 trillion.
Yeah.
So this is going to rise. All right. So I believe there's some commitment towards spending being more productive. However, with the budgets that we've seen, Recurrence is still higher than capital expenditure. Even with the recent adjustment by the House of Rep and Senate, the little adjustment anyway, it was a move. It didn't change the total, but it moved from capital to recurrence even further. So this is some messaging that it's kind of not so positive. But I think gradually we might be getting out of spending unproductively. But as long as it still remains a factor, I think money supply measure remains important.
Fair enough. The exchange rate, of course, we cannot have a monetary discussion without talking about the exchange rate. We have seen some stability. We contacted BDCs about an hour ago. We got a rate of about 1,515. Meanwhile, the on FMDQ, yesterday's closed at 1,509. So that spread is narrowing. What's your take? Let's also look at the international money transfer inflows. I think 9 months through 2024, up about 63%. 3.8 billion or so. So what's your take on how the central bank has, overseen the currency?
Kudos to the central bank. They started last year, early in 2024, by rejigging the IMTO space, trying to attract them to inflow more money. What they did was they made it a bit more liberal. They took away a lot of restrictions that were in place by the previous admin. That helped. And then, of course, with the fact that the spread or the margin between PDC and the official rates has thinned out. Effectively is zero, but real estimate is about 1%. That would further increase IMTO inflows, particularly to the official market. Because earlier we had a situation where IMTO flows stayed offshore and did not come into the economy because of price difference. Because if they were to come into the economy, they would officially have to sell at the subsidized 400 levels. Meanwhile, offshore they could get at the 700, 800 levels as at 2023. So that's the reason for this jump that you noted, the fact that it's been harmonized. Another thing that we want to give kudos to the CBN for is the introduction of the B-match system. Okay, so it's the electronic FX B-match system. That has brought a lot of transparency to the market. It's taken away the ability to somewhat collude between market players because on that platform, the bid and sell is masked. You can't see who you are dealing with. So you're forced to deal based on price.
Not who is behind the price.
So, and then it's the entire market. So it starts off with the bid and the offer being a widespread in the morning. But as bids inch up, offers come down. At some point they meet, and then when you see bids being taken out, if you are a high offer, you will know that you will not get any buyer. So you align accordingly. So all those dynamics has helped. Also, the CBN introduced the FX code. So in line with the transparency story of the B-match, FX code is now speaking to ethics of the market players, not just bankers, entire market players. So the corporate space, whoever, IMTO and all that. So it speaks to the ethics of the business, governance, risk management, settlement process, and the likes. So that has been fantastic and brought all of these results. However, I believe that it's part of the reason why the CBN is cautious. We saw the federal government raise about $8 billion through the domestic dollar bond, then its euro bond issuance, which was a massive success. Both issues were a success. However, external reserve has remained flattish at 39.4 billion as at Valentine's Day. So, according to the CBN's speech. So with those numbers, I think the CBN is cautious about all of this success. So it's a good success, but there are still underlying issues.
Yeah. We have to bring you back to have a fiscal conversation. Thank you for joining us to talk on the monetary side, Mr. Ronald Nwaezeapu, Divisional Head, Global Markets, Treasury, Financial Institutions at Coronation Merchant Bank. Really appreciate your time. Thank you so much.
Having me.